Just a couple of days ago, we saw SoFi hit its all-time low and reach the oversold territory with an RSI reading of 29.98. The shorts must have been on cloud 9 for breaking another all-time low record. We'll give them that. What they don't know is that the SoFian soldiers haven't even flinched. Well, okay, maybe flinched a bit, but continue to hold the line. Some have even been crying in the line. Comment "cry and hold" in the comment section down below if you're down on your SoFi position, but still holding. But for real, ladies and gents, it seems like we're in peak despair. In this video, we're going to discuss why SoFi is never going to $0 a share. That means the bottom to the short seller full-on war is somewhere right around the corner. For those of you down 30% or more, feeling like you made the worst decision of your lives investing in SoFi, this video is for you. Will SoFi continue to fall from the heavens, or will the shorts have to get themselves a load of cash to cover their future losses? Just how low can SoFi go? In this video, we seek to answer that exact question. In this video, we'll go over 3 reasons why, so make sure to watch until the very end so you don't miss it. Now, first things first, we're not financial advisors, and this is not financial advice, so always do your own due diligence. Also, for you hardcore SoFi investors out there that are getting absolutely thrashed, don't panic. We just officially launched our SoFi focused Patreon where you can find our price targets, buy ranges, and see our entire SoFi position and even get access to our exclusive SoFi investors Discord chat. Check out our Patreon link in the description or top pinned comment. Stock prices are just a matter of supply and demand. The stock price goes up when more people are actually buying it and takes a hit and goes down when people sell. And there are a myriad of reasons why people sell. Some people sell for tax reasons, some sell to pay some urgent bills, but most people sell because they give into the noise and throw the company's fundamentals out the window and they completely forget why they bought in the first place. If you're a day trader and solely focus on technical analysis of the stock, it's always good to also know the fundamentals of a company. For example, day trading in Nikola seems a lot more risky than day trading in, let's say, Apple stock. Since the stock price is down, some geniuses in our comment section think SoFi will go bankrupt. And we're here to tell you, in our non-financial advice opinion, SoFi is very well capitalized, so this is very, very unlikely. As we can see, SoFi stock is getting beaten up by the selling pressure coming from the short sellers and the bears as it continues to break resistance from its recently recorded all-time lows. Now you might be wondering, when is this going to end?
I'm glad you asked.
To be fully transparent,
nobody knows what comes next.
Even SoFi's head of investment strategy, Liz Young, said,
"It's so tempting as a strategist to say this is the bottom or this is the top or the bottom is coming. I won't do it because I'm almost guaranteed to be wrong."
SoFi is now moving around $6 to $7 per share at the time of recording this. You may be wondering, will SoFi ever go bankrupt and reach $0 a share? Well, let's dig deeper. Point number 1. SoFi is going positive on EBITDA and revenue guidance. We've made about 100 videos on SoFi, and we're not getting tired of telling you, or at this point, reminding you that SoFi is growing anywhere you look, from members, products, and lastly, SoFi is killing the game in revenue guidance and EBITDA margins. For the 6th consecutive quarter, Captain Noto managed to deliver a positive adjusted EBITDA amounting to $5 million for the last quarter of the year. And for the first time, SoFi had its first positive full-year adjusted EBITDA of $30 million. With that, Captain Noto even said, "The best part is that we were able to reach both our adjusted revenue and adjusted EBITDA milestones ahead of plan in an increasingly challenging operating environment, while also significantly exceeding our member growth guidance." While it's true that strong revenue and EBITDA margins are huge green flags for the company you're investing in, the question lies in the demand for investors for SoFi. At this point, SoFi is out there with about a $5.91 billion valuation. This leads us to our next point. Point number 2, the key players in the market are buying. According to Investopedia, institutional investors are believed to be a major force behind supply and demand in the market. Sometimes they call this smart money, because when these investors invest in stocks, of course it's what they do for a living, they usually spend tons of money on analysts and the market data they need before making a move. And sure, we know some analysts are straight up just full of shit. But when a ton of institutional investors are investing, that's definitely a good sign. In a nutshell, the institutional investors seem to be invested more than regular investors like us. And when they buy a stock, it shows they did their due diligence. There's many reasons someone may sell a stock, but only one reason why any person or institution would buy: because they think it will go up. If you're one of the Wealth Gambit OGs like Jimmy Jim and Chando and the rest of the gang, you'd probably know that we've made tons of videos about this. Just 6 months ago, institutional investors bullish on SoFi held about 39.82% of the stock. At the time of recording this, the big guys now hold about 46.39% of SoFi. It's actually a good sign that many of them stay positive on SoFi and see more of them coming. A lot of news surrounding SoFi lately is boosting the ego of these shorts, whether it be interest rate hikes or student loan moratorium extension. It's possible that some of these institutional investors held back for this opportunity and increased their position right away when it did fall from the heavens. Like Grandpa Buffett said, the stock market is a device for transferring money from the inpatient to the patient. On to our last point. Point number 3. SoFi moves around with a 1.4 price to book ratio and better days are coming. So what does this mean? The price per book ratio tells you things between a company's stock price and its book value per share. If it's really low, you're dealing with an undervalued stock. And if it's high, you get an overvalued stock.
That's it? That's it. That's it.
But which would you prefer? Honestly, an undervalued stock or an overvalued one? SoFi currently has about a $5.91 billion market cap, while it's trading around $6 to $7 per share. If you're a value investor, a good price per book ratio would be 3, at least according to Investopedia. It even said the lower PB, the better. At this point, SoFi has a 1.4 price per book ratio. That's literally less than half the price to book ratio that Investopedia says is good. If that's not undervalued, then we don't know what is. In the meantime, SoFi is trading at far less than what we feel is its intrinsic value. So much so that someone even posted this actual picture of SoFi every morning. Shout out to that Reddit user. SoFi's not alone though. S&P, NASDAQ, and Dow Jones are taking their fair share on the gloomy days in the market. Charlie Munger once said, "The big money is not in the buying and selling, but in the waiting." We may not know the peak of this bear market, nobody will ever know, but one thing's for sure, SoFi's fundamentals are rock solid. So solid, in fact, take a look at this actual picture of SoFi. Given this information, do you still actually think SoFi could go bankrupt? If the answer is yes, then
have you not been paying attention?
Plus the impact of the bank charter that will take a full swing in the next coming quarters. Yes, not the upcoming earnings call, but the following after that. Not to mention that SoFi is still yet to experience the full growth of its tech leg in Galileo and Technisys. SoFi is in deep water right now, pressured by President Biden's decision on student loans and the fuss in multiple rate hikes. Has SoFi finally bottomed? Although we can't say for sure when SoFi will bottom, we can say with full confidence that in our non-financial advisor opinion, SoFi is not going to zero, meaning that the bottom is somewhere in between where it's at now and zero, but not at zero.
Take my money.
Shout out to the people who showed us support on our previous video. We're right here holding with you. Also, special shout out to our Patreon supporters who truly help to make these videos possible. Shout out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Jordan Worth, Casey Patel, Jeff Sherman, and Gregory Villar. Be sure to check out Gregory's YouTube channel if you want to know how to travel the world efficiently. We really appreciate all of your support. That wraps it up for today's video, guys. What are your thoughts on the all-time lows of SoFi these days? Are you bagging more or are you just holding? If you found any value whatsoever in this video, please smash that like button for the YouTube algorithm and subscribe if you haven't already. Until next time, peace.